So the Bank of Canada held its policy rate steady at 2.75%, and that's after 7 consecutive cuts. Let's get perspective from Charles St-Arnaud, chief economist at Alberta Central and a former economist with the Bank of Canada. Charles, it's great to see you. Thanks for giving us the time. Quite a few economists are saying that they are going to be cutting again.
Yeah, well, it's very likely. We know, and we already see it. The extreme uncertainty that we're seeing right now is having impact on business confidence, on consumer confidence. Everybody seems to be reducing their spending, and that is already having some impact on the economy. So we know from that it's likely that we will see more cuts. The big question is more on the inflation side. Are we going to see inflation remaining contained, or we'll start to see some more upside pressures?
You say people should recognize that the Bank of Canada will be resolute and it won't let inflation spike above the targeted rate.
Well, I think one of the issue often that I hear is that a lot of observers seems to be thinking that the Bank of Canada has a dual mandate like the Fed. The Bank of Canada doesn't have that dual mandate of inflation and full employment. The Bank of Canada's mandate is 100% the inflation target. And I wouldn't be surprised the Bank of Canada and the management has a bit of a trauma from the past few years where we had a big spike in inflation and all the negative impact that has had on the economy and especially consumers. So they will be very careful not to have a similar repeat in the coming year.
That's right. During they and other central bankers thought, well, this would be transitory, the COVID tangling of supply chains. Speaking of which, though, global supply chains could well be tangled with Trump's tariffs, and it sounds like that'll be inflationary.
Yeah, and that's what the governor was saying this morning, is that it's very hard at the moment to have a clear perspective or clear outlook on where inflation is going, because, yes, we have some deflationary factors in Canada from, well, weaker growth, weaker demand. So that will be putting some downward pressure on prices here in Canada. But we don't know exactly how much the disruption to the global supply chain will actually increase cost for businesses. And we know and we see in surveys that businesses are ready to pass those costs to customers relatively quite quickly.
Just talk to us about the population growth. The previous government ratcheted back policies that have brought a lot of newcomers to Canada. You say slower population growth will be another thing that will certainly bring down economic growth.
Well, hidden in the monetary policy report in April, there's always the new estimate of what the Bank of Canada thinks the neutral rate is. And surprisingly, they didn't slightly downgrade their neutral rate because we know the lower population growth will drive potential growth in Canada much lower this year. We know if the target of the government are actually reached, we will have population growth of slightly below zero. And that would be a major drag on potential growth this year. And that will further bring the neutral rate lower. And that's my view, is that means that by the end of the year, 275 in terms of policy rate that we have right now may actually end up being restrictive.
Oh. Will they must be wary about heading towards zero interest rates in real terms.
Yeah, well, the zero interest, I don't think the neutral rate is zero. I think the neutral rate is probably closer to 2%, maybe slightly below 2% by the end of the year. But that means that there is, unless they bring interest rate there, we're not going to have any stimulative monetary policy until we reach below those levels later this year. So that's why the Bank of Canada will need to continue to increase rate just to keep monetary policy from being restrictive.
Hang on, give us that again. I got lost a bit there. Sorry.
Yeah. Well, what we're seeing is that the neutral rate, which is basically where the point at which monetary policy is neither restrictive, neither accommodative,
yes,
will gradually, slowly glide lower. So that means that for monetary policy to continue to be neutral, they will need to cut in line with that neutral rate.
Yes. Right.
So, and that's part of the reason why they will need to cut anyway, even if there was nothing else happening in the economy.
Quite a gloomy scenario. Obviously, a year-long recession in Canada, and of course, it does seem plausible with the incredible disruption. What about stagflation? Could we get that though? Weak growth, companies cutting investment, firing workers, but supply chain messes caused by Trump putting up prices.
Yeah, well, that's definitely what, even though the Bank of Canada doesn't call it stagflation, that's basically what the scenarios are showing is that we know tariffs will be negative on growth, they will be positive on inflation. The question is, which one of the two sides is basically going to win that tug of war? If it's more the weakness in growth and lower inflation, then they'll be able to cut a lot more. If it's more the supply chain disruption and higher cost and higher inflation, then monetary policy might have to be kept higher for longer, or at least not decline as quickly as some are expecting.
Charles, we'd better leave it there. Certainly a time of heads being scratched. Obviously, who knows where this is going to go, this tariff war. Thank you very much indeed.